I'm Greg Bunnell. Welcome to Market Call. Kim Bolton is on the show today. He's president and portfolio manager of Black Swan Dexteritas. He wants to take your calls, your emails, and your tweets on technology stocks. So give us a call. It's toll free. 1-855-326-6266. You can send an email at marketcall@bnmbloomberg.ca, or you can chase us on Twitter. We might even check the feed. Kim, welcome back to the program. It's great to have you here.
Great to be here. Thanks a lot, Greg.
So what's on your mind these days? Obviously, there's a lot to worry about. Black Swan Dexteritas, the whole idea of the Black Swan event. I feel like Donald Trump's working awfully hard to bring us one.
Well, he's brought a few, hasn't he? You know, as I've said before when I've been on here, we expected this year to be sort of a mirror of last year. Just a lot of volatility, but you never know when it's going to happen. The Black Swan. And we had quite a few Black Swan events, you know, just back in May, a month ago. You had the whole issue about the U.S.-China trade talks breaking down, Theresa May quitting, North Korea sending up some more missiles, and then the whole Mexican fiasco of Trump saying he's going to impose these tariffs.
And that one felt so out of left field because we know that he likes the tariffs, but he'd been using them on trade policy. And then everyone was like, but this is an immigration issue. But suddenly, changed the rules of the game again.
Well, and unfortunately, it worked for him. So
yeah, he got what he wanted. So there you go.
So, you know, he's going to come back and he's going to use these tariffs for geopolitical means going forward. And you never know when it's going to happen. However, I think, you know, it played in well for us. We were fully invested going into the year. A good many of our holdings, probably about 2/3 of our holding, hit price target. We've got a lot of cash. April, we ended up putting a lot of hedges on the existing. So we actually went through May with a small gain, whereas the market was actually down, you know, anywhere from 6 to 8%.
Yeah, I think we'll show that to the audience right now. We're looking at a few lines here, but basically we're looking at global tech, Russell 2000, so the smaller stocks, the NASDAQ, and of course here at home, the S&P TSX.
Right. The blue line is so this is for the month of ending the end of April, going through to the end of May. And as I said, you know, we had a lot of cash. We had about 55% cash, the rest fully in 45% in various stock holdings, ETFs. But then we had a hedge on top of those holdings, and you can see we actually made money during the course of May. Whereas the purple line there, that is the S&P TSX, and then you have the NASDAQ, and then you have the Russell down below. So, you know, our investment thesis, this is a great example of how our investment thesis actually works.
So the summertime comes under regular rules of the game, which we haven't been playing with for quite some time now, but under regular rules, you know, some people check out, they step back, the trading volumes shrink. Do you think we're going to have that kind of normal summer, or anything goes this summer?
I think anything goes. Last year, you had 6 corrections of 5 to 10%. Last year, you had 2 corrections in excess of 10%. And I think you'll probably have a similar play out this year. You know, we're in the later stages of the business cycle. And there's so many moving pieces that are going on that translate into volatility. And you just have to have an active manager to actually, you know, the old sort of buy and hold is not going to work this year.
Got to be nimble. Nimble times. We're going to be back with Kim Bolton, president and portfolio manager at Black Swan Dexteritas. He wants to answer your questions on technology stocks. So give us a call. It's toll free. 1-855-326-6266. Start things off with an email from Robert. Wants to talk Alibaba, wondering what Kim thinks of the name. What do you think of Alibaba?
You know, we've very much backed away from a lot of the Chinese names. You know, we own them going into the beginning of the year, but we sort of pared it back and we just haven't bought back into it. Mind you, we have a very, very small position of about 3.5% in the Crane Internet ETF, which is a basket But we were just talking about it this morning that we're sort of thinking about taking it off. Now, Alibaba, we've been in and out of this name. You know, it's one of the top 10 biggest firms in the world in the internet space. We actually like Alibaba for both the cloud and the e-commerce side. But really, when it comes to a lot of the China stuff, and not until you get clarity at the G20 on 28th, 29th of this month and see if they actually have a kumbaya moment, we're just sort of staying away from some of the Chinese stocks.
Yeah, the political risk. It's interesting because I've been talking to other money managers and fund runners as well, saying they might like the name, they might like Baba, they might like some of the other companies as well, but as long as we don't know what Donald Trump is going to do next and how China is going to respond, they just don't want to have their money working there right now.
Right. You know, that Crane Internet ETF, Chinese Internet ETF, which we got about 3% in, you just got to be sort of in the game because you never know when it's going to have a lift like it did yesterday. So in China, they came out and they gave that fiscal stimulus, and you had the Shanghai Composite up 3%, you had the Shenzhen up 4.5%. So you got to have a little bit, but we're underweight. You know, normally in the Chinese internet space, we'd have a full position of about 10%, but we're only about a third of that.
So often when we see a stock that's suffered a big pullback, and then I know that when people like it, they're watching it, but they don't want to be the first ones in. They want to see that the recovery has taken hold. If we extrapolate that into politics, that must be much harder to read. When does the Chinese-U.S. relationship look better? How would we ever know?
Exactly. And so Alibaba is so cheap here, and you should buy it. And normally what we do is that we maybe put a strangle in options or just go out and buy a call. But the problem is exactly what you're saying, Greg. You don't know when. So therefore, you don't know what the maturity date you should have surrounding your option strategy on such a cheap stock as this.
We have an email from Victoria. She wants to talk about American Tower, AMT, in New York. Would you please give me your perspective on American Tower and where it fits with the evolution of 5G? I feel like every question goes back to China. 5G, Huawei, politics again.
Yeah. We bought into American Tower actually in the first quarter because we got some cash. And, you know, American Tower, it only has a dividend of 1.8%. It's a REIT, and it's all the towers that you have around. It's humongous around the world. On that REIT side, we have American Tower, and we also have Equinix, which is the big data center group. But it's not cheap. It's got a PEG ratio of 3.8. We actually see as a price target on this right now sitting at around 211, and we have a price target on this of 223. So it's not that far away from, you know, so it's priced to perfection.
I was driving through cottage country a couple of years ago, and I noticed a painfully straight tree that was taller than the rest of them out in the woods. And then you realize, wait a minute, that's a cell tower.
Exactly,
That's pretty clever. All right, let's email from Rod. CRISPR technology. Kim, what do you think about CRISPR technology? There's no E in there, but I'm assuming it's pronounced CRISPR. So, you mean like the stickler for spelling.
Yeah. We follow this. It's a small company, but it's actually come up very much on the radar because what they do, they develop transformative gene editing medicines for diseases. But they're a small tadpole and a big C. They finally actually got a transaction with a pharmaceutical company, Vertex. So that actually makes it a very interesting play because this allows, when they get into a relationship with a Vertex pharmaceutical, this allows them to actually scale it out. Fantastic product, but it's a matter of actually getting more and more customers. And so they've done the right thing.
Yeah, it's CRISPR Therapeutics. Let's see what the street thinks about that name. 9 buys, 4 holds, and 2 sells on CRISPR. They have a 12-month target price of $58.05. That'd be a 37% lift from where we're trading right now. We'll be back with Kim Bolton. He's the president and portfolio manager of Black Swan Dexteritas. He wants to answer your questions on technology stocks. We all love them. We all have questions about them, so just send your questions our way. 1-855-326-6266. Chris in Edmonton wants to talk Zebra Tech. Send us an email. Said, what's your opinion on Zebra? I don't know anything about Zebra.
So Zebra, I think it's out of Vancouver. It's so they design and they build automatic identification and data capture. Basically what it is, Greg, is that they have those barcode scanners,
Okay.
right? Small player in an awfully competitive field. So in this stage of the business cycle, we end up going for the leadership. Zebra does have the ability to be a little bit nimble. They've been growing, you know, top and bottom line have been growing in sort of low double-digit area. But they actually have some free cash flow in there. But we just haven't bought into them. It's currently trading at 193. I think the street out there has it as a price target, 12-month price target of about 120 to 130.
Yeah, the street, 7 buys, 3 holds, and indeed that 231 12-month target price on it, 193 today in trade south of the border. We have Gus in Sarnia on the line. What's your call? What's your question, Gus?
Andrew, you change your hair.
Yeah, Andy Bell, we traded him in from me. Just one day, though, one day.
Okay. Greg and Kim, nice show. My question is on Uber. I've been watching analysts. Some of the older analysts trash it because it's overvalued. I don't know why people are paying so much, blah, blah, blah. Some of the younger ones, however, are viewing it. Some have gone as far as to say it reminds them of Amazon. It's going to transform the way we transport anything. So I want your opinion and consensus, please.
Yeah, great question, Gus. The future of Uber.
Mm-hmm. Gus, yeah, I wanted to take this call. Gus, we don't own it. We didn't go into the IPO to buy it. You've seen the volatility in it. I think it actually made it back to the IPO price, but it's just sort of hanging in there. The reason I wanted to talk about it is because, for 2 reasons. Number one, it certainly influenced the IPO market. And number 2, it is very much a disruptor which actually leads us to other stocks out there. But unfortunately, well, we don't own it. On the IPO side of it, it really told the street, told portfolio managers, that you gotta, it's fine to have a disruptor, but you have to have a financial model that has a runway. And at this stage of the business cycle. And they cannot tell you, Uber management cannot tell you when they're gonna be profitable. So therefore, we stand back. So I think that has influenced very much the IPO market. And you can see the recent IPOs that have come out, that the ones that do really well are the ones that actually explain a very, very logical runway to profitability. On the disruptor side, it's had such a big impact because, like you said, Gus, it is sort of like an Amazon because it gets involved in delivery. It gets involved in autonomous driving. So it's having a great impact of actually moving forward the whole big data side of it and the deep learning, the machine learning, and the artificial intelligence. So they're in the right space.
They're in the right space. Uber right now has 23 buys, 7 holds, and 0 sells on the street. We have our young investor, Dave, on the line from Toronto. What's your question, Dave?
Hey, my call. I wanted to ask basically about Accenture. It's a stock that's like consulting, and consulting has a lot of gross margins in it, from what I know. And they consult Google and Amazon, and I wanted to know, would you buy it for like a young investor like myself? And do you own it in your portfolio? Have you done your due diligence on this stock? Thank you.
Yeah, what do you think of Accenture?
Thanks, Dave, for your call. I wanted to take the call because we don't own it now, but we have, and we've sort of gone in and out of it. But it is a space that has had so much consolidation. So there's sort of like a KPMG within IT, and they go into companies and they help them go through portfolio management of IT services. And in this space, there aren't that many. So there's Accenture, there's CGI out of Montreal. And actually, Dave, I'd recommend you look at that. If we see another pullback, which we very much believe you will, I would look at Accenture and or CGI.
Yeah, it's interesting. Right now, the 12-month target price that the analysts have on this name, we're pretty much there.
Yeah.
We've exceeded it by a whopping 60 cents. So they feel like the stock has reached their goals, at least for now.
Yeah. But, Dave, you will have a chance to actually buy into that.
16 buys, 7 holds, 3 sells on Accenture PLC. Heinz sent us an email, wants a stock recommendation. Recommend a stock in the security field. And don't make it one of your top picks at the end of the show. We don't want to spoil the surprise. There's the caveat.
In the security field. And this is from, I'm sorry,
This is from
Heinz.
Heinz.
Great question. Heinz, I have 3 analysts. One of them is here in Toronto, another one is over in Tel Aviv, another one is in Silicon Valley. The fellow in Silicon Valley, his job is actually, he's chief cybersecurity for Alibaba. So he has great insight. There are a lot of phenomenal names out there. And what we have done, I mentioned before that we were involved in that Crane Chinese Internet ETF. And we're also involved in the bots, which is the automation robotics. We actually took some profit in that going back in April. We were sitting on some cash. So Heinz, what we did is that we bought Hack, the ETF. And it has a great spectrum of all the leadership out
Hack,
there.
HAC in New York, right? HAC. HACK, pardon me, is the ticker.
Now, Heinz, if you forced me to actually suggest one stock only instead of actually a basket, I would recommend CyberArk. CyberArk. You know, I was thinking about it, maybe FireEye or into CyberArk, but CyberArk has really sort of carved out a niche within privileged access management. So it actually protects enterprise databases with passwords and everything, and they've really sort of carved out a great niche, and it's really struck a chord out with the corporate world out there. So CyberArk.
All right, CyberArk, if you're curious out there, CYBR, listed in the States. CyberArk software, which of course is also second top holding in that Hack ETF. Stay tuned. The past picks are coming up next. Time now for past picks. We go back to June 1st, 2018. You like Dassault Systems. We're looking at a 12% return on the time.
And actually, Dassault was just in the news today. They just bought a company called Medidata over in Europe. And it's a great mix because, just back up, Dassault is involved, is sort of the poster child of what we call digital twins. It's actually taking physical objects and creating avatars on screens. And then you can actually fiddle with it, make it more efficient, more effective in whatever that object or machinery actually does. Anyway, Dassault just bought today a health life sciences firm called Medidata. they have such a huge footprint. So we currently have a smaller position. We did have about 2.5. Took a bit of profit on this recently, and we got it down to about a 1% position. Currently trading, I think, around 154.
What do I have? Which listing do I have right here? I have 134.95. From what exchange? Is it on several exchanges?
This was actually an ADR. So we have
the ADR to New York, yeah, be
yeah.
price to what I
and we got a price target on that of 163.
All right, the next one on the list is Infineon Technologies. This one hasn't been performing well. What's going on with the stock?
You know, it's like the whole of the semiconductor space. But, you know, Infineon is a Dutch-German company that is a leader when it comes to chips and power management for electrical vehicles and the whole autonomous driving ecosystem. We currently have a 3.5% position. We like what they've been doing. A lot of the semiconductor side has actually pulled back, particularly in May. This is why we've actually added to it. Currently trading, I think, around 17.5 down New York, and we got a price target 12 months out of $28.
The last one on the list was 10 Cent Holdings. Now, I understand there was a bit of a spin-off near the end of last year, so our people have done the math based on, as of December 28th, the stock is a bit higher than that right now. It's at 337 today.
Yeah. We sold out of the actual stock. We still own a little bit of it within that Crane Chinese internet side. You know, Tencent is a monster over there when it comes to the social networking, huge when it comes to online games. They just got a big boost in the last week because they got the go-ahead to bring out the new PUBG popular game, which is the PLA game. Currently trading around $44, and we got a price target 12 months out of 56.
Okay, we'll be back with Kim Bolton, President and Portfolio Manager at Black Swan Dexteritas. He wants to answer your questions on technology stocks, so give us a call. It's toll free, 1-855-326-6266. Peter is on the line from Vancouver. What's your question, Peter?
Thank you for taking my call. Kim, congratulations for your great results, making money in May, even though the market is down sharply. So, a request from you, can you please have a top pick, a Canadian stock? All yours are American, so we can have the benefit of your wisdom. Today, I last asked you about AMD. A very good stock. It's been all-time high. Thank you very much, Kim.
All right. Advanced Micro Devices, AMD. The volume on this stock is always huge on a daily basis.
It's a very, very popular stock with the institutional players out there, too. But it's priced to perfection at this stage. But, Peter, you're going to be able to buy this back, you know, currently trading in the low 30s. Peter, you can buy this down at around 25. You're going to have a correction, if not many this year, and you'll have the chance to actually buy it. AMD has really sort of eaten Intel's lunch on this, and it's very much being incorporated and is sort of the poster child out there when it comes to taking market share from the likes of Intel and even NVIDIA out there. Peter, I would hold off, and I think you're going to be able to buy it down sort of the mid-20s.
Patience.
Yeah.
Patience on AMD, Peter. All right, we have Roger in Edson, Alberta. What's your question, Roger?
Yes, thank you, gentlemen. And I'd like your guest thoughts on Bolton Technologies going forward. Thank you very much.
Bolton Technologies, Toronto listed.
Greg, if you could pull up the chart.
BYL in Toronto is the chart on this one. Right now we're at $3.91.
Right. So I think, Roger, you're going to be able to buy this down sort of closer to 3.25, 3.40, something like that. However, we won't be there with you, but we follow it because it is an interesting player, but again, a tadpole in a big sea. And what they do is they design and manufacture active radio frequency products. But then, you know, they have to go up against the likes of like a Skyworks. And you can see it in their financials. You know, they continue to lose money. And they're small. You know, they got a market cap of about $120 million. But they do have a pretty strong a customer base. So we like the company. It's too small. Peter, I think you'll be able to buy it south of 350.
$156 million market cap.
Yeah.
That's a small outfit.
Yeah, yeah. But they've been around, you know, they've been able to last it.
All right, that was Bolton Technologies. We got Steve on the line from Brampton, Ontario. Is this my next door neighbor, Steve?
I wanted to ask about Google. In your past episode, I believe it was one of your topics, and it has antitrust issues. Are you scared off by that? And would you buy it at this level, or would you? What? Knowing this information, which price point would you buy it at? Because it's gonna grow, but I want to buy it at a good price. Would you wait for like $950 or sub 1,000, or would you buy it right here? Thank you.
Good questions. Google definitely cheaper than it was just 2 months ago, but can it get cheaper?
Absolutely. This is in our top 10, if not the top 5. Phenomenal company. And currently trading just over 1,000 US.
Yeah, $1,074 and change.
And it's been all the way up to, what, 1,275. Phenomenal company. You know, Google is made up of 3 parts: the ad side, the YouTube side, and then the Waymo, the autonomous driving. You know, if you break Google down, about 3/4 of it comes from the ad side, of that $1,000 or the market cap that they have, and then, you know, and then it's sort of evenly split, maybe about 150 billion for the YouTube and maybe 175 billion for the Waymo side. Will they break it up? You know, if they broke it up into those 3 pieces, they actually run as independent business units anyway.
So it wouldn't be that big of a disruption.
Right. But they have such an enormous part of the ad market. But just think about it. You know, here we are in 2019. Last year, they made $175 billion out of the ad revenue side. 175. But in 2001, when they got into this, in 2001 they made $70 million. $71 million to $175 billion. Phenomenal success rate. Now, when it comes to the whole antitrust, just my view and my editorial is that, you know, you have the FANGs here in North America, and you've got the BATs over in China. And I think what will happen, you know, the Chinese must look at it and say, oh, you know, bring on that antitrust because it'll just make us stronger. And so I think they will regulate it, but I don't think they'll break it up.
Donald Trump doesn't want to play into China's hands.
No.
I like that take on it. We got Deborah. Oh, sorry, we got, let's get things straight. Do we have Deborah? Yes, Deborah in Okanagan Falls. Deborah, what's your question?
Gentlemen, I'm calling you from my home gym, and I just want you to know you make my workouts a little less painful with your show.
Good to hear.
Yeah, so I want to qualify. I am a growth investor, and my question today is on Microsoft. I bought at 122, and then 2 weeks later, I flipped it for about 130.90 in that little bit of a downturn. I noticed in the tech stocks that the company's held pretty steadfast in some of the pullbacks of the other big giants. I'd like to get back into it. Do you see a summer pullback?
All right. Can Microsoft get cheaper in the dog days of summer?
Absolutely. And Deborah, what I'd recommend, yes, first of all, yes, you'll be able to buy back into it. And I think you'd probably be able to get it down somewhere between 110 and 120. But next time, Deborah, what I'd suggest is don't sell the whole thing. Just sell a bit of it. As I always sort of look at it, when I go to take profit, if it goes up, I still have some to sell some more. If it goes down, you can say, hey, that was pretty smart of me to actually sell some. So you can win either way, but to just sort of sell out of a position, you can get into some frustration. Oh, I wish I could have had it. Microsoft has to be a core holding in a growth portfolio. It has such a long runway, and it's consistent. Nadella and his team around him have done such a fabulous job. And for portfolio managers, he's exactly what we look for because he's consistent. There aren't any surprises. So that's what I'd recommend, Deborah.
Microsoft at $131.06 a share. Conrad is now on the line from Oakville. Conrad, what's your question?
Hey, Kim. What is a good way to play big data and machine learning?
Good question.
Great question, Conrad, in Oakville. This is we have an investment committee that of a lot of successful serial tech entrepreneurs. We meet every month, and really the big theme, where these entrepreneurs see the opportunity is in big data, on the hardware side and also on the software side. So it's a great question, Conrad. So either hardware or software in big data. On the hardware side, you have the likes of the processing guys, which are the chip manufacturers, and then you also have the communications, which have had a lot of consolidation. There you've got the Huawei, you've got Ericsson, Nokia. Over on the processing side, you have all the semiconductor sides. On the processing side, one company that I'd recommend, Conrad, is Xilinx. Xilinx is involved in that field programmable gateway array chips. They have a monopoly in that, and it's very much used for
do you have the ticker off the top of your head for Xilinx?
XLNX.
XLMX.
NX. Yeah.
NX.
Yeah.
That isn't Nancy.
And this is actually one of our top holdings in our portfolio. Now, over on the software side. So on the software side, you have where the data is held, and then you have the analytical companies that are taking the data apart and then being able to communicate what that data actually means. So on the data sources side, one of the companies I recommend, Conrad, is over on with Equinix, world's largest data center. But interesting, probably the best place to play the big data is over on the data analytics side. And you can see a lot of M&A activity. This week, you just had Salesforce buy Tableau. Thank goodness. We had a 3.5% position in Tableau. But I think you're probably going to see some more consolidation in there. I don't know how many more public companies that the big guys can actually buy, but they'll be buying the private. So over on the, and we'll get to it in the top picks, but one of the companies that we recommend, and we started to build a position in, is Adobe.
Adobe.
Right? And they're very much involved in the data analytics side. I hope that helps, Conrad.
All right, a lot of great ideas there. The more the merrier. We'll be back with Kim Bolton, President and Portfolio Manager of Black Swan Dexteritas. Wants to answer your questions on technology stocks. Not too late to get them in there to us. Give us a call, 1-855-326-6266. We have Alana on the line from Vancouver. What's your question, Alana?
Thank you for taking my call, and it's a great show. I have a question about the Titan Medical. I'm interested in the medical robotics. I'm interested in this whole space, and I've been owning the Titan Medical, but I'm a little bit losing my patience, and I'm not sure if at this point I should buy more, as today's even dropping, or should I really sell it and forget about this particular company? But I do like medical robotics, and I think we're going forward with that in the medical system. But I'd like to know, what do you think about the space, and what's your perspective, and is there any other company that you would recommend? And what do you think about the Titan?
Titan's a small player out of the U.S., $69 million market cap.
Yeah. So I don't know Titan. But I'll tell you how we actually play in this space, and that's through an ETF, and it's the BOTZ, B-O-T-Z. It's not pure robotics because it also has some automation involved in there, and it's not pure in the medical space because it also has it into the manufacturing. But that diversification in this space is important. Now, to answer more directly your question, only because we know it from knowing bots, there's a firm down in the States which is one of the largest robotics medical groups, which is Intuitive Surgical Inc. And it's actually the largest holding within the BOTZ. So if you're looking for a single stock, Intuitive, but I'd look for the diversification through that ETF called BOTZ.
Right, Intuitive is ISRG in America. We've got Jerry on the line in Toronto. What's your question, Jerry?
Good afternoon, Kim and Greg. I'd like you to do a comparison for me of Electronic Arts versus Activision Blizzard. Do you own either one or both? Do you prefer one over the other? What do you think about them fundamentally from a valuation point of view? Thanks, Kim. I look forward to your response.
Love it, Jerry. I love a showdown, pitting one against the other. Who comes out on top?
So, Jerry, we have owned them. We don't own them right here. I'm just looking at, and my analysts actually do their quarterly reports. You know, on value, I would actually have to recommend Electronic Arts. PEG ratio is about 2.24 versus Activision Blizzard, which is 2.75. So, but it's been a difficult space, especially because over half of the world's gamers actually come out of China. It's probably closer to 2/3. And so with everything going on in the geopolitical space, it's very much influenced. And you can see it in the stock prices here. You know, Electronic Arts sitting around 92. We have a price target 12 months out of 110. And then for Activision Blizzard, 45, and we have a price target of $57, 12 months out.
All right, I'm torn. I haven't played video games in a long time, but Activision made River Raid, my favorite game in the 80s. And then Electronic Arts started making all the Star Wars games in the 90s, so I can't add anything to this conversation. That's not what I'm here for. I'm here to take the calls. Caroline in Burnaby's on the line. What's your question, Caroline?
Hi. I bought OLED over a year ago at $120, worth $5,000. Now, is it a time to hold on to it, or is it a sell all? Your thoughts, please.
Universal Display.
Yeah, thanks, Caroline. I think most people know about Universal Display smartphone. So what Universal Display does is that they have the screen. They have the royalty for the screen. So whether it's an iPhone or a Samsung or a Huawei or whatever, if it's an OLED screen, Universal Display gets a royalty. Great business. And the reason it took off is that prior to the OLED, the screens were about a dozen layers of various materials. And then OLED actually took it down to about 3-4 layers. So all the smartphone makers love it. Better picture, much clearer, less space, you can put more in the phone. So that's what it's all about. Now, universal display. If you go back into December, into the big December swoon, you could actually buy it down high 80s, low 90s. And we actually sort of started to buy it from 120 all the way down to 90, and then we started to let it go sort of around 152 all the way up, and it went all the way up to like 172. Here we are at 172 again. We bought it again. So the reason I go through all this is that this isn't, again, a market where you just sort of buy and hold. You have to look at the ranges. And this is a great trade, great stock to actually trade. This 170 to 180 seems to be a ceiling for it. And I think you can actually buy it down. You can start buying it at around 145 all the way down. And you will get a chance to do that.
We're going to be back after a short break. The top picks are coming up next. It's time for top picks. First one on the list is Adobe. You spoke a little bit about this earlier, but what do you like about Adobe going forward?
Yeah, this plays in well with the whole big data and the whole data analytics side. So Adobe has now become a one-stop product design, content creation, marketing. It's on the web. It's got mobile commerce. They just bought a firm, Magento. And it got them into the whole e-commerce software as a service vendor space. And then they actually partnered up with Amazon so that they could take on Shopify. So we currently have a 2%. We look to actually build it up to around 4 to 5%. Currently trading around, what, 273. It's not that expensive because it's got a PEG ratio of 1.53, and we got a price target on this of $295.
All right, so hot for the Adobe. Next one is Aptiv PLC. What are they about?
Remember Delphi?
I do remember Delphi, yeah.
So they carved the whole, they carved it out into two pieces. And one part was Aptiv, humongous. It makes Magna look small. And basically, they design and manufacture vehicle components. But they're not only involved in the hardware, but also into the software. They are a leader in that side of it. So it's a bit cyclical because of the whole automobile industry. We currently have 2%. We look at again to actually build it up to about 4 to 5%. We're actually sitting on about 21% cash. So it's currently trading around, I think, 76.5. We got a price target on this of $98.
98, so that'd be a nice bit of upside. Last one on the list is Oracle. Oracle.
You know, I never thought this would actually come up on our radar. Because it's...
But then the NBA playoffs started, you saw Oracle Arena, and you thought, hey, wait a minute, I have an idea here.
So, however, the last few quarters, they've been a lot more consistent. You know, in the Q3 results, they overachieved on the top and the bottom line. They gave great guidance. They've done that for a couple of quarters. You know, they sell data space software and technology. They're involved in the whole ERP and the customer relationship and the supply chain management side. They've got the whole thing in one package. They finally got into the subscription side. They begrudgingly got away from the licensing side, as a lot of players did, and did very well in it. We currently have now. We have this as a play within the IGV, which is the software. But I think it's number 2 or 3 in there. It's about a 8.5% position within the IGV, which gives us about a 1.5% position. Currently trading at $54, got a price target of $62.
All right,
so
Kim.
it is still a bit rich.
Still a bit rich. We got about a minute on the clock. Any final thoughts? I always think heading into summer that everyone's going to check off their brains, but then I learned talking to you guys that you don't shut off your brains like the rest of us. You keep on thinking about the investments.
Yeah, I guess in the last minute, what last year has taught us, certainly in the technology arena, is that there's a lot of volatility. A lot of your callers come in with very exciting names and investments, but you have to actively manage it because you are in the later stages of this business cycle. There are so many moving parts on the geopolitical side, so pick your points or pick your managers like Black Swan Dexter does.
Always great to have you on the program, Kim. Look forward to the next time.
Thanks a lot, Greg.
As always, thank you for watching at home. That's it for this edition of Market Call. Of course, you can watch the encores. They're all over the channel. So just jump in there anytime you want.